Welcome to the US Stock Q&A show. You ask, I answer. How can a small amount of capital grow into a large one? In my opinion, there are three feasible ways for small capital to grow big. The first way is through time and compound interest. Don't underestimate an annualized return rate of 20%. If you invest 1 million in US stocks, buying shares and steadily earning 20% per year over 20 years, the compounding effect will bring your total return to 3,700%. That's 37 times your original investment. Your 1 million will become 38 million. The second way is by stock picking, finding stocks that can increase 100-fold. You need sharp insight to pick outstanding companies and then have the conviction to hold on to them. For example, if you had bought Nvidia or invested in Meta's stock 10 years ago, your returns would have been dozens or even hundreds of times your original investment. Picking a stock that increases 100-fold is like boarding a rocket to wealth. But the problem is, most people don't fail because they can't spot these opportunities, but because they can't hold on, they get shaken out by volatility along the way. The third way is through leverage and short-term trading. This is the fastest way, but also the hardest, and it carries the greatest risk. With leverage, you can amplify your gains, but your losses are magnified as well. With short-term trading, you can chase quick profits, but it requires extremely strong discipline and risk control. The option strategies that Abao demonstrates in his real money trading challenges fall into this category. I started with a principal of 4,000, and in 11 weeks, using the leverage of options, I grew it to 107,000, a 26-fold increase. But the reality is that for every success, countless others fail. Many people not only fail to grow their capital, but the more they trade, the more they lose. So to sum up in one sentence, the core logic for growing a small amount of capital is, the first method is the most stable, but also the slowest. The second relies on vision and luck, and the third depends on skill and mindset. Which path you ultimately choose depends on who you are. Can you talk about where the next investment boom will be after AI? Abao believes that after AI, there are two major trends, robotics and new energy. Let's talk about robotics first. Have you noticed that labor has become more and more expensive in the past couple of years? It's getting harder for factories to hire people, wages are rising rapidly, and business owners are constantly complaining about labor shortages. So who can replace humans in these jobs? The answer is robots. In the past, robots were just mechanical arms on assembly lines, but now they've evolved to handle warehousing, logistics, and even domestic care. In other words, they can solve society's biggest pain points, labor shortages and high costs. This is a fundamental need for the coming decades. Moreover, the development of large AI models will make robots even smarter. Industrial robots combined with service robots are the twin engines driving industrial upgrades. Now let's look at new energy. Things like electric vehicles, photovoltaics, and energy storage aren't optional. They are strategic directions that every country must invest in. In the future, the energy landscape will definitely be dominated by new energy. Whoever controls energy will hold the initiative. Robots can solve human-related problems, while new energy addresses energy issues. These two directions represent the most fundamental challenges for human society over the next 30 years. How does Abao view the upcoming trend of the broader market? Is it a good idea to chase the rally and enter the market now? The current price of US stocks is indeed a bit too high. Honestly, it's a little hard to pull the trigger right now. Buying in at this point is like grabbing chestnuts from the fire or licking blood from the blade. A pullback may be delayed, but it will never be absent. Around the end of the year, Abao believes there is a chance that the US stock market will experience a significant correction. The big one is coming. If you look back from May to August, US stocks have already risen for 4 months, and in September, they've been moving sideways. So far, October also looks like a sideways market. In previous live trading videos, Abao has explained that a traffic light turns from green to yellow to red, and the stock market goes from rising to moving sideways to falling. Sideways movement itself signals a weakening and reversal of the trend. That's why Abao believes there's a chance of a significant correction by the end of the year. What stock goes up every single day? Right now, you absolutely shouldn't chase the highs. Whoever chases the highs will end up losing quietly. So, what technical indicators are there, exactly? The most common and basic ones, like candlestick charts and moving averages, are things you absolutely need to know. I won't go into detail about those here. Besides those, first of all, VWAP is a great indicator. It reflects the average cost at which the market is buying a stock. If the stock price is above the VWAP, it means the market as a whole is making money and the trend is relatively strong. If the stock price is below the VWAP, it means most people are losing money and the trend is relatively weak. Next is the RSI. Above 70 indicates an overbought signal, while below 30 is an oversold signal. Then there's trading volume, which should be analyzed together with the chip distribution and price changes. If a stock rises but there's no volume, be careful of a false breakout. If a stock falls without volume, it could be a false decline. In a real market move, both price and volume should rise together. Next is the KDJ indicator, which is the best indicator for short-term trading, bar none. When the K line crosses above the D line, it's bullish. When it crosses below, it's bearish. A value above 80 indicates the market is overheated, while below 20 means it's oversold. Finally, there's Abao's exclusive secret technique, max pain. This is Abao's secret weapon for analyzing the options market. The max pain price is the price at expiration where the most option buyers lose money and the most sellers make money. Many times, as expiration approaches, the stock price is drawn toward the max pain point. Abao calls this the principle of attraction.